Hello and welcome to what I'm calling the new era of charts with Cart. Now, instead of the weekly videos of 15 to 20 charts just being banged out, we are now going to be focusing in on just a few charts and we're going to do some really in-depth analysis, and the charts I show are going to be the charts as I see fit. Okay, so today we're going to be discussing gold, and I'm going to get into where I think gold could be in the next week or so, in the next coming up months, and then ultimately where I think gold could potentially top. And we're also going to get into a couple of my top plays for gold. Without further ado, let's jump right into gold's daily chart trading at $2,386. So zooming in here, what do we see? An upsloping resistance level that we've tagged twice recently. That's where I think we're heading to now. Where is that level? That level's upsloping. It's approximately going to be at $2,500. So why do I think we're heading there? Because we broke this level of resistance on the way up, closed and confirmed above that level. Ultimately, if you have been watching my videos, I said we were going to probably correct to around 2260. We ended up heading as low as around 2270 something on this consolidation sideways. So we weren't too far off. We did expect a little lower, but as soon as we saw this resistance line break, that was the end of that. We flipped bullish immediately. And hey, we trust the charts on this channel. We are now looking for a move towards 2500. Alright, we are now looking at gold's weekly chart. Now, on this channel, we have talked a bunch about this inverse head and shoulders pattern here, that if you project the target from the head to the neckline, and then project it to the scene of the breakout, that gives us a target of around $2,520 for gold. That's a technical target for this pattern here. That doesn't mean there's going to be steep resistance there. It just gives you a little guidance on a potential target. I, in fact, think that if we break that daily resistance level at around 2500, that upsloping line we were just talking about, that we will go right through 2520. Turn the attention to the weekly stochastic RSI, we are crossing up. Previous times we have done this, right here, what did we do? We broke that really bullish pattern, headed from around 2000 to 2400 and something. We've had crosses here. We went from around 1800 to 2100 or so. So these crosses are everything on gold. It signifies momentum coming in, and prices usually go up fast and hard. So hey, if we have a continued cross here, momentum will continue to come in, and gold can quite possibly head up to this pocket of trend lines right here. This pocket of trend lines could act as some steep resistance in the next few months. I do think we're heading into this pocket here. Expect that to be anywhere between 2650 and 2700 when we get there. That's my target for the next few months on gold. Potentially as high as 2700. Alright, so we're now on gold's monthly chart. We've already established that the daily chart looks bullish in the short term, the weekly chart looks bullish for the next few weeks, and the monthly chart. Well, let's zoom in what's happening here, because it looks a little bit different. So you had an up move, and then you saw these wicks here at the center of this parallel channel. These wicks indicate selling pressure. So the middle of this larger parallel channel here is acting as resistance. To me, what does this mean? This means that this whole parallel channel is a pretty valid structure. We're holding resistance at the top, support at the bottom, and we're dancing around the middle. Now, the middle doesn't have to act as support or resistance, but typically if you see price dancing around the middle, it typically gives you more confluence that your structure is valid. So the wicks here, although they are bearish, they're selling wicks, momentum to the downside. It's resistance. It's a level of potential resistance. Now, here's the concerning thing here. In June, we printed what is called a spinning top. These things are found at the tops of rallies. We just had a big up move. It has little to no body, and the candle has a wick to the upside and a wick to the downside. So the thing about a spinning top here, it doesn't mean it's a top. What signals that it's a top is that the next candle is bearish, so it prints to the downside. And what have we done so far in July? Well, there's 23 days and 19 hours left in July. Right now, our candle is bullish, indicating that prices can continue to go up. So as long as this monthly candle doesn't close below 23.20, we're going to be totally fine on the monthly chart and we're going to continue to look bullish. However, if this month of July closes below 23.20, then we're going to have to reevaluate this chart because it will then go bearish. All right, now still looking at the monthly chart on gold, let's look at a bit of wave analysis. This is the scenario I'm looking at as being the most probable on gold right now. I believe we are in the ending stages of a super cycle here, particularly a wave 5. We are in the wave 5 of a super cycle. Now, where are we in this wave 5? I believe that it's most likely we are in the wave 3 of our cycle. So we're in wave 5 of the super cycle, meaning we're probably entering a wave 5 of the wave 3 of the cycle. I know it's a lot of words coming right at you, but that's where I think we are. So what would invalidate this wave structure here is if we dropped below 2080, because we don't want to drop below the high of wave 3 right now. And we also don't want to drop below the high of wave 1 right here. So now that I cleaned up the screen, let's take a fib extension from the low of wave 2, the high of wave 3, and the low of wave 4. Where does the 1618 extension head to? 3090. Now that's just one number here. Let's add some confluence to that. Let's head to the monthly chart channel we were looking at. This major monthly chart channel that I said was structurally valid just a few minutes ago, where is the upper resistance at? Well, it'll be at around 3,000 in April of next year, and in September of next year, it'll be at around 3,100. Those two numbers are just adding confluence to what the wave counts are telling us. Back on the weekly chart of gold right here now. If you're looking at the trend lines on the screen, where are they all colliding here? Well, this pocket of trend lines at around 3,100 is colliding at the beginning of quarter 3 2025. So there's a lot of confluence of resistance at 3,100 in quarter 3 of next year. Mid 2025, there's going to be resistance at 3,000 to 3,100 on gold if we get there. So the recap you guys were looking for, I'm bullish on gold this week. I'm bullish on gold in quarter 3. I think we're going to head to 2,700 before we experience some more consolidation, a potential correction, and then potentially make one last high and go on a crazy push up to a max price of 3,100. And this is all potentially valid as long as we don't break that $2,080 level, critical for our wave structure. So I'm not saying we're going to get to 3,000 for sure, but I'm saying if we do get to 30,000 to 3,100, expect a major top at that level. So that is my top prediction on gold. 3,100 is your max price on gold in 2025. That is my take. Alright, so now that I showed you why I'm so bullish on gold and how it potentially could go on a maximum 30% run in the next year or so, let me show you two of my top picks revolving gold. Okay, so here's CXB. This is a chart we've talked about on this channel before. I highlighted this inverse head and shoulders here and how it would be critical that we'd hold this level on a retest, and we absolutely did before pumping massively last week. So we printed a bullish engulfing, and honestly, our next resistance here is going to be at around 230 to 240. We're trading at $2.05 right now. I think we're going to head up into this level here. So if we break this resistance, we're heading up to $3, making an all-time high on CXB, because this is the projected target of this inverse head and shoulders right here. So $3 would be my target if we break the 240 level on CXB. Alright, so we're now looking at the weekly chart of EQX. This is Equinox Gold trading on the TSX at $7.91. So what you see here recently, we've been in this upsloping channel here. And what did we recently do? Well, rejected at the top and went back to this blue zone here. This is now a zone of demand. Once you flip a zone of supply, it becomes a zone of demand. So a supply right here, it was also channel top resistance. Supply all along here, we blasted right through it, in the month of March. So now we came back to retest it as support, beautifully held as support. I do believe we're on our way to the top of the channel once again. It'll be at approximately $9, $9.15 when we get there. So healthy run to the upside is what I'm expecting in the next few weeks. If you break that, potentially we can head all the way up to this target up here, and that would be at around $11.50. Those are my targets for EQX. Now, if you want to see my favorite gold-related stock that is highly volatile because it's a lower market cap mining company, then check out my Patreon. There's going to be a video posted there. It is my favorite play in gold right now. I think the returns are going to be amazing. Alright, but to sum up the key important parts of this video, it's that I think gold is going to be going on a massive run, potentially will top in 2025. According to the super cycle, that top might last many, many years. Like I'm talking 5-6 years potentially. And I do think that gold has a capacity to go to 3,100. Doesn't have to get there, but 3,000 to 3,100 in mid-2025 would probably be the top. So keep that in the back of the mind. The supercycle wave count suggests many years of corrective price action if we end there, and that is invalidated if we drop the $2,080 level. Alright, that's all I got. Thank you for watching.
잘고 드나 비상가 내 빛에야 빌라 몰라 좀 killer인다 헤이 막노 bombo 카 kill my love people time 좀 반나 first class